Welcome to this video. In this video I'm going to be doing an Adobe stock analysis. Now I should probably know Adobe hasn't been that great of a stock recently. As you can see, it has been quite poor. We had a top back here in 2024 and ever since it has just been quite poor, and we're almost down 50% from that point. Now before these huge peaks and falls back in the day, as you can see, it was an amazing stock zone, really just riding upwards and upwards and upwards. And the reason for these huge falls is people think, like myself, think there was too many competitors recently, and that is companies like Canva and CapCut. Now the problem with Canva is, of course, they have something where you can edit images, which is a huge problem for some like Illustrator and Photoshop users. And of course, you also have the fact that you can edit videos in Canva. That is a problem for Premiere Pro. You also have the fact that CapCut, you can edit videos for free, and the same with Canva is it's for free. That is a huge problem for Adobe because, of course, it ain't free. Now, so that is personally why I'm not a huge fan of Adobe at the moment. Now, if we look recently, as I said, it has been quite poor, and the RSI completely agrees with me. As you can see down here in the RSI, we have been below 30 quite a lot of times, down here being oversold, which means there's a lot of sellers in the market, and rarely have we been up here in overbought. We have sometimes up here in overbought, but most of the time it has been in the lower channel as well, between 50 and 30, meaning that the momentum is downwards. Of course, we also see sometimes upwards up here, but overall, as you can see, it is quite poor. As you can see, we do see some spikes upwards, like right here, but overall the trend is just downwards. We do see some gains here and there, but overall it really isn't that great at the moment. Now the market cap for Adobe is 140 billion, so it is quite a huge company, and the beta is relatively low, which of course should say, hey, this is a relatively safe stock to own because the volatility is quite low. But that just means when it rises less, and it falls less than the average given index. Now the EPS is amazing on this stock. As you can see there, it is insanely high. That is because they have surprisingly low shares float compared to how large the company is. Now they don't pay out in dividends, which is quite interesting because given how much money they actually earn, and their margins are quite amazing. Now this would speak against my thesis that it's overvalued because of competitors like Canva, CapCut, and so on. As you can see, this is like a nice stairway. As you can see, simply making more and more money. Now if you look at the way they make their money, that is by digital media and digital experience. That is like Photoshop, Illustrator, Premiere Pro, so on and so forth, and the Adobe PDF viewer. Now, if you look at the overview of the company, as you can see, the debt is relatively low compared to the market cap, and they almost have as much cash as they have debt. Now, something I do find interesting is how many employees they have, because Adobe, as a design company and a coding company, I would find it quite interesting to think that they don't have more energies with AI and can reduce the amount of heads being employed. And it would be interesting to see if they can lay off quite a few people, because that, of course, would generate higher revenue, because employees are insanely expensive. Now, this could also be a huge, huge value play. Say I'm wrong, and of course they retain their customers as the price income statements here would show. It is insanely cheap at the moment with a price to earnings at 21 and a price to sales at 6.15. Now, of course, last year it was 78, and P of a 41.73. Of course, this could be a huge, huge value play if the other investors like me are wrong. Of course, that is the reason why it has fallen so much from the top, as I'm just going to show you again. Of course, the reason it has fallen so much is because the popularity of Canva and CapCut, especially those two, and of course we also see their competitor Figma has become on the IPO. So of course, that is quite a problem for Adobe. So of course, right now it's just quite a bit of headwind, which of course is a problem. Now, then again, if we look at, as you can see here, the free float shares, we see quite a little amount of closely held shares. This is very nice because sometimes we see a large amount of closely held shares, and these are shares who can't be sold by investors or CEOs, of course. Now, of course, a huge company and an old company like Adobe shouldn't have any at all, or that many, and of course, this is perfectly fine at 0.3%. Now, if we roll down here and look at the performance, as you can see right here, the past 10 years, as you can see right here, it has been quite a nice stock to own. We have this year and last year have been quite poor, and 2022 as well were quite poor, but before that it was an amazing stock to own. Now if we go back to before 2022, let me just do like so. You can see even better. What if we even do one more year? As you can see, we have almost 10 years with straight profits, of course, in the stock, which is absolutely nuts. So as you can see, it is a great, great company in that regard because it had built such a huge moat, because nobody does video and editing like, of course, Adobe does. Now, if you look at the technicals, as you can see down here, for the day it's a sell, for the week it's a sell, and for the month it is still a sell. That is, of course, because average is just downwards and downwards and downwards. And we even saw a death cross here recently, as I recall, is right here on the 2nd of October. We did see death cross, meaning the short-term momentum is lower than the long-term momentum. Of course, this is quite a poor technical. Of course, this is saying the stock should just fall lower and lower. Now, if we look at the analyst target on this, as you can see, 25 says strong buy, 5 says buy, 11 says hold, and 2 says strong sell. I'm definitely putting my head on strong sell or hold. If you have this stock and you're at a loss, to be honest, you could hold at this point because it could be an insane value play. But if it falls 10% more, so if we go down to about 300, I would just sell, because if you hit that low, I just think it's going to continue to do so. And we might see a case like Novo Nordisk where people just hold their stocks for way too long, even though it is falling quite a lot. But overall, I do think in a year's time, I think we're sitting about the same, maybe 350, maybe 340. So I think it's going to trade sideways right now. Now, if you look at annual earnings, as you can see, it is just guiding upwards and upwards and upwards. Again, this might suggest a huge value play, but until we see some more synergies with AI and they actually bring this guidance through, I'm not buying this stock at all. And it's exact same down here with the annual revenue, as you can see here. Again, they're just guiding upwards and upwards. But when we see Canva maybe being a bit more prevalent in companies and just retail users, I do think we're going to see some huge problems for Adobe. Now, that was my analysis on Adobe. If you like this video, please don't forget to leave a like and subscribe. And of course, if you want to see more videos like this, please leave comments to analyze in the comment section below.